Hello, everybody. Welcome back to 21st Century Renaissance, and welcome back to another Open Interest Newsletter Breakdown. I am your host, Dr. Michael LoPiano. Let's get right into it today. We are looking at a potential test. We actually look, based on our price position right now, we actually look like we've already had an initial test of the lower bounds of our bullish regression channel in our pre-market trading. I wouldn't be surprised if we got another one of those, maybe right off the open, maybe later in the day, something like that. Maybe it wouldn't quite look like a test, right? We may just have this one bounce. But yeah, we're spending some time thinking today, what can we expect from today's price action? Maybe what does today's price action, if it does play out the way I am anticipating it to play out, what would then that mean for, say, next Monday's price action? So we're going to take a look at that. Maybe think a little bit about, what might be some external events occurring this weekend that might affect what occurs next week. Maybe what has occurred this week a little bit that might play into that. So we're going to think about that a bit today. So just a few announcements. Yes, of course, if you'd like to follow along, right, pre-market every day, I post my detailed options and technical analysis on GameStop on my X page. It is linked down in the description of this video. If you're watching this on YouTube, it is up pinned at the top of the page. If you're watching this on X, do please go ahead and check that out. That is what I refer to on a regular basis here with my shared screen. This is what I work from for these breakdowns. And yes, today is Friday, so this evening at market close, 4 p.m. Eastern time, I will be hosting my weekly live session. We will spend some time today, reviewing some of our price action for the week, reflecting on potentially how these analytics played out, how they related to our price action. Maybe think about some of the potential trades that would have worked out really well this week, and thinking as well about, so this week, I think I mentioned earlier, otherwise category 42, Reddit user otherwise category 42 posted a pretty sizable, calls it a DD. It's not quite a due diligence. That's a very specific thing within investing language, but right within the Superstonk community, anything that involves quite a lot of research is usually referred to as a due diligence. It is a very excellent, very well put together and well researched bit of research that pulls together a lot of concepts that I find are certainly worth discussing, certainly worth thinking about if you've never heard of some of these for the first time. So this includes things like Regulation Extension Code 68. It also details some theories and possible formulas for estimating how market makers, how major participants internalize major orders, fail to delivers, without getting them to show up as fail to delivers on a particular stock, through ETF redemption and creation orders. So we'll be thinking a bit about that. I want to walk through some of that. In particular, I want to walk through some of the observations that otherwise category makes with respect to the sneeze, as it is referred to, especially among the Superstonk community, but this upward volatility event in 2021, right? This is an incredibly unique event that it really strikes me. Still to this day, we do not really fully understand. We do not have a beat for beat model of how everything goes down. And certainly even taking a look at the SEC report on what actually happened, there are some components perhaps that are left out. So we'll be spending some time during the live stream thinking about that. And of course, there'll be time for questions as well. So really hope you'll join us there as we get ready for the week to come, our final full trading week of 2024. So okay, so let's get into our article today. Yes, so two things I'm thinking about. Potential channel test. We got one here in the pre-market. We actually look to have already had a pretty decent size reversal off of that, off of this channel test at $28. We're basically in the last 2 hours of pre-market trading, we've made our way back up pretty much. I see the ask right now is at $29. So interesting to see that play out that way. and potentially thinking about a reversal on Monday, maybe as a continuation of some of this initial bounce that we get off of this technical level today into Monday, and possibly related to some sort of a requel rhyming event. I'll break that down a little bit for us as we get into it. So sort of the introductory image today is right on December 21st of 2020. This was the date that in this key date in the lead up to the 2021 sneeze, or this huge idiosyncratic upward volatility event in GameStop in 2021, a majorly important event, certainly that is recognized by the larger GameStop community, but is likely, is also recognized by the SEC report, at least insofar as it encouraged some heavy sentiment among the retail investing community, the online retail investing community, is Ryan Cohen's, the filing of his amended 13D, where he increased his position size in GameStop by about 30%, crucially doubling down on his belief in the continued fundamental strength of the stock coming out of the Q3 earnings dip of that year, right? So he went in and purchased all throughout that week, which culminated in the 18th of December. His last trade came through on the 17th of December in 2020. So yeah, this was a big event. As I mentioned earlier in the week, this resulted in some initial his buying. It looks like at least some of his buying influenced. Maybe it was completely technical. Maybe it didn't make it to the lit market. It was several million shares at the time, pre-adjusted. So I think it's something like 2.5 million shares he purchased to take his total up to 9,001,000 at the time. So yeah, that would be something like 8 to 9 million. 8 to 9 million split adjusted shares today. Basically what his buy-in was at that time. So uncertain, right? I've pointed this out a few times, exactly what the effect on the stock price was of those purchases at that time. It's very possible that most of that order was internalized, was sort of can-kicked. It's possible that buying may have triggered some form of either that buying or the announcement of that buying may have triggered some margin requirement some margin requirement, meetings. I don't know what I wanted to say there, but may have triggered something like a margin call on some larger players. Meetment, that's a new word. So this was an important element in the 2020 lead up. We'll talk about this a bit more in tonight's live stream. But this was, if we are seeing something like a requel right now, if this whole requel idea is something that extends to this kind of beat for beat, the key days of 2020 will prove to be key days here in 2024, then maybe we see something like that. Maybe we've seen something like that going on in the background now. Maybe something like that will occur next week. So just want us to keep that in mind as sort of like a narrative event, a symbolic event maybe occurring in the background of what we see. But if we, let's see at least, what our data has to say. At least let's primarily take a look at what our data has to say, and if it suggests that we might see any sort of trends that would align with something like a requel, right? So yesterday's trading, retrace. That was the subject of yesterday's article. I think I call it Retrace to the Future. Retrace. We had this big dump down from like 3170 all the way down to 2834, something like that, intraday, on using the Federal Reserve announcement by Jerome Powell as a catalyst to send the stock down almost to our lower support line on our bullish regression channel, almost. Before a little bit of a reversal, we got a bigger retrace intraday. And what this looks like, right? We flirted with some of these technical levels here. We went down to this $29 gamma position, a pretty sizable accumulation of call gamma at this point, right? As this is approached through the options market, what this results in is some support. So positive gamma positions, call gamma dominant positions present an exposure type scenario that stimulates a type of hedging, wherein when these positions are approached either from below or from above, this causes gamma values to increase, which causes or decrease, causes gamma values to increase in such a way that market maker hedging will counteract the directionality of wherever the price is being pushed in the options market. That is what I would like to say. So $29 was approached here. This coincided right with our lower VWAP bound. We had the midline of our what has transformed into a range bound regression channel, something like that. What was formerly purely a bearish regression channel. Which now we can see, right, it's more or less lining up pretty closely with the lower half of our bullish regression channel. So, right, the price got walked down here after a little test of the 200-minute simple moving average, and then set up for a bigger reversal trade. Okay, why was this reversal so big? Well, one thing that user Ultimator, if you guys follow Ultimator either on Superstonk, on Reddit, or here on Twitter, he does usually, and by usually I mean regularly, he does a good job of pointing out when computer shares recurring buys take place. It's not a huge amount of volume, but potentially the anticipation of this buying volume, right? Not massive, but potentially the anticipation of this can set up, or likely did set up, the options market, did set up GameStop's market in general to prepare a nice technical setup to sort of send this signal for a reversal, right? I don't think it kicked in until right about here. So usually it happens around 10:45, right? And this reversal trend began around 10:32. So, we got this trace up to VWAP, and then that time-wise, that lined up the price cross VWAP right around when those recurring buys would have started to kick in. And so then this shot the price up, right? So then the recurring buys were buying from, something like here to here. And this provided some nice exit liquidity for anybody who entered into trades here. And then, of course, this allowed traders to enter into short call positions, maybe some long puts. We did get some long puts yesterday. This is, our profit-taking range, right? Traders exiting for profits here. There was another little test, another little intra-trend reversal here, playing around with this 50-minute simple moving average first as kind of a little hang-up support, and then as a resistance before heading back toward VWAP, and right then basically capitulating. Right, this was a small retrace event. As soon as it got above our call wall at 30, it played a top 30 for a bit. Right, we can see kind of all the hesitation here, right? Interaction with dealer hedging, unsure, okay, do we use this as a support? Is it going to be a resistance? What's going to happen? And then, oh, okay, we're going below, take profits. Okay, we're done. Okay, it's then, sell calls, buy long puts, go into this, and then trade down into the lower part of this channel, and all the way back to where we opened, which was that $29 decent size call gamma accumulation level, which also happens to be the midline of this range-bound regression channel, this kind of neutral channel. And then, of course, pre-market traded down. We got some shorting, probably through ETFs. Probably something like, right, we saw SPY close at something like 284 and then 7 decimal places, which is a hilarious number to see the stock close at, an ETF close at. And then, so this was probably some trading down as a result of that. I think it went down to 579 in the pre-market, and then it started to recover. So what we've seen is GameStop basically by now almost make it back to 29. It's come all the way back to 29. So, what does this look like sort of in our broader technical range here? As we can see right there, right, we're testing the integrity of this channel. We have a confluence of this sort of range-bound structure, this transformation of what had been a bearish regression channel into something, it's actually slightly upward leaning now, but something more range-bound. And testing whether we will, yet again, right now, a third test, I guess a fourth test almost, something like that. In any case, yet another test of this lower support. So typically what has happened for one reason or another, right? There's been a number of seeming external catalysts that have catapulted us back to the top end of this channel, that seem to be divorced from, well, who knows, right? I mean, they seem to be external, but potentially not. Although it's hard to disentangle sentiment, technical factors, market mechanics, and some of these external events. But right, we're testing this again. It does look like we've taken this as a deflection and moved back towards 29. I would not expect us to move too far off of that. I mean, maybe a bullish institution comes and just dumps a bunch of capital, and we head back over 30 for a day, and then get shorted down. So especially those 30s, once again, as I've talked about all week, end up out of the money. I would think something a little bit more flat in this kind of lower range today, and then maybe a retest. Max Pain looks to be about 20. Well, it's listed right now at 27.50 in terms of just OI. I think the true dollar value Max Pain is something closer to about 28, as I talked about yesterday, probably a little bit below 28, based on the based on the number of puts that are also there at 28. So yeah, I could see us. I definitely see us closing close to Max Pain for this week. I think that's the most likely scenario. Something could change, obviously, right? Something could come out of nowhere, announcement from the company, Roaring Kitty posts something on X. Who knows, right? This can always happen. Bullish institution goes, you know what? I'm going to throw 20 million at the options market. Screw you guys. Like, that can happen. But I think, as I've said before, right, ceteris paribus, without any kind of interventions, without anything external, I think that we are looking at hanging out below the midline, or we kind of use the midline of this channel as a resistance point and use this area as a support point, and we kind of trade in here, and then reassess where we're going to look next week. And it does look like, based on this formation, if we do in fact throughout the day maintain this bullish regression channel's integrity, then shooting back at least to the midline, probably a bit above, something like up to the 32 range looks to be what we're expecting technically if we do stay within this paradigm, which I'm not seeing signs yet that we would exit it. Shorting can happen, heavy shorting can happen, but again, what seems to have been the case going back to December 5th, it did look that, I'll bring this up again, right? It did look like here, back when this channel was a bit narrower, when we had right? So back around December 5th, the bottom line, the support line of our bullish regression channel, more or less lined up with the 104-hour moving average, which is synonymous with the 20-day moving average. These two support marks, I guess 3 technical levels aligned, and bears with, on the one hand, with interventive shorting on that. This was the Wednesday of that week, so that would be December 4th. We got some interventive shorting at some key technical levels, several 100,000 shares, and I saw, this was the thing that I wrote about, the day that I was suspended from Reddit indefinitely, I noticed that this happened on the prior day. So I noticed this happen on December 4th. We had like 100,000 shares of shorting push us through a support line on that day. You can go back to my article from the one that's dated December 5th and take a look at this. And we had a pretty large lit order come in, right? So a whale came in with 144,000 shares at the ask, right when we had reached a level that would have sent us essentially back to where the shorting took us away from. But instead, that ask order was routed to a dark pool and did not hit the lit market. So none of that demand actually got expressed on the tape. So what was that? Why didn't that actually affect the price? Who knows? Who knows why that took place? But that looked like shorting, and then exclusively rerouting an order of a similar size of the counter sentiment to a dark pool such that it not affect the price. That looked like price control, right? That looked like securities fraud. on the point of on the part of a brokerage or a broker dealer, something like that. Right, rerouting order flow. That's selectively rerouting order flow. Doesn't reroute a large short order. Does reroute a large order at the ask. Okay, who knows, right? That's, I mean, I just see what I see on the market. I just see what I see in the data that's provided to me when I look at order flow data, things like that. So who actually knows? But what did occur is that the next day we got this post from Roaring Kitty that as we were exiting our channel, as we were showing some weakness and potentially heading down toward what looked to me at the time like a move to push us down to this 204-hour moving average, was then hit with Roaring Kitty's post, the time you cover, and we shot all the way up to $30.89 is about as high as we went. So pretty big reversal, about a, gosh, almost $5 reversal in the stock. As soon as that post hit Twitter, we had something like 1.5 million volume, just like in a second. 1.5 million buy volume hit the tape. So it looked like we tried to do this right before earnings as well, and then Ryan Cohen threw a curveball to bears, right, saying we're not going to do an at-the-market offering. We reversed up to 31. So the two times we've really definitively tried to eject from this channel, we reversed. We reversed pretty heavy to the upside. Okay, it's been right. The channels had to have been widened just a little bit, but it is by and large intact, right? It was skewed a little bit farther up earlier, about 2 weeks ago, and not quite as much room to the downside. But it's remained largely intact as a result of these events. So okay, so why am I talking about this, right? We could get some heavy shorting that would push us out of this, just like we got at either of those events. But again, now both the company and Roaring Kitty have shown whoever does this type of heavily interventive shorting, hey, keep in mind that we can just talk about the company. We can present some things about, well, okay, in Ryan Cohen's case, he can publish things about the company. He's got things that, are positive, right? There aren't these same negative catalysts. He can still, it's within his power to do things to foil the expectations of potential bears. And Roaring Kitty has shown that basically whatever he does will be reacted to, will cause, will influence, I guess, these like sentiment scrapers, like these algorithms to pump GameStop, to pump other maybe basket stocks associated with it, something like that. But this presents a risk that usually short sellers don't have to account for. They're used to being able to do this with impunity and get their way, not get trapped in their positions. And there are likely some shorts that got trapped in these positions as a result of trying to force the stock out of this technical paradigm, for one reason or another. So that looks like what is at least technically forecast for us. Yeah, right. Max Payne moved up as we saw a lot of profit taking in terms of calls. So in the money calls coming off the board to seal in profits, and out of the money puts coming on the board. This is what raises our Max Payne. So I would say it's probably intraday today. What we'll see is it's going to, in the ideal measurement, it'll go up to about 28 just based on open interest. But the real measurement's probably going to be slightly below that, maybe like 27.75 or 27.85 or something like that, based on what that would mean for payouts, right? Given how many puts we have at, say, 28. So like we've got more calls so we've got fewer calls at 28 than we have puts. So it's going to shade, if it has to shade slightly to the upside or slightly to the downside of one of these marks, it's going to shade slightly to the upside because of what that would mean for payouts to those puts. Disproportionately, there'll be if we shade close to 27.50, there's going to be a decent amount of, right, let's say 50 cents. Let's say we close at 27.50. It means that those 5,000 puts are going to be worth $50 a pop. So that's going to be something like 250,000 for a payout. Whereas if we're at 2850, then you send those out of the money, but completely out of the money, but then you got to pay whatever it is for this. Something close to 28 is probably going to be closest to 28 is going to be the best. Slightly below, I think. Well, best in terms of market maker optimum profitability. Right, still showing 27 on this. Yeah, it does look like Chart Exchange doesn't update its max pain values until open. So, but on maximum pain, it is updated as of pre-market. So very good. Yeah, gamma values looking a little bit, gamma exposure, definitely. I mean, this accords with the open interest data, looking a little bit more bearish, not crazy, not, forecasting price collapse, but something like that, right? We have negatized this 2850 to 2550 area. We still have this, because we have so many puts here at 28, it does seem to me like there would be this put wall effect there, which I spoke about yesterday. This is where, right, as puts are approached from a decrease in price, right, from above, the implied volatility goes down, which causes them to lose a little bit of value. There's a bit of a trade-off in the intrinsic extrinsic value right as they're approached. And so dealers don't necessarily hedge in the same direction, the same way they would sort of in ideal circumstances if you just controlled for implied volatility. So right when you get there, sometimes on a big put position, there can be this kind of put wall effect. It's not crazy. It's not a crazy support, right? If you're determined to push through that, if whoever in the market is determined to push through that, they can. It's just that there'll be this kind of several minute hang up there, which could be enough to stimulate an intraday reversal, something like that. So we do have this sort of phantom support there at 28, likely because of that put wall in case we do retrace back to 28. But as long as we're trading up in the sort of 29 to 30 range, I could see us concentrating some of our volume here, maybe not reaching the call wall. If there is a lot of bullish volume for some reason, we could get back up into this area like we did yesterday. But I do think that the way the system is set up, right, the way that market makers are incentivized, we're going to be looking at a close probably down here, probably as close to 28 as it can reasonably be. That's what I'm thinking is an ideal close for market makers. It's going to result in about 90% of our calls being out of the money, and I think something similar for puts. So market makers would certainly appreciate that. Yeah, this is what I iterate here. IV trends, yeah, while we stay within this bullish regression channel, we're going to see comparative IV spikes while we move up, as we move up to the top of the channel, and then IV is going to depreciate as we come back down. And we're going to see this kind of hee-haw, kind of seesawing back and forth while we stay within that channel. If we exit that channel, then I would anticipate us seeing implied volatility flatten out a bit more. It will continue, I think, to sort of, if we stay too range bound, if we exit the bullish regression channel sideways, or the bullish regression channel kind of flattens, then our implied volatility will go down a bit. But until I see that happen, I have no reason to expect that the dynamic we've been seeing over the past week or the past few weeks, minus the kind of appreciating background effect of the approach to earnings, I have no reason to expect that would not continue. So yeah, we'll be on the lookout for potential 13Ds maybe this weekend if we are looking at this kind of rhyming event for the requel. Maybe insiders have been doing some buying. Maybe somebody like Nat Turner, right? Nat Turner currently has no compensation from the company. He's on the board of directors. He has no salary. He has no stock options. He has no stock in the company, right? The only sort of compensation for him is what is prospectively promised via the partnership between PSA and GameStop and the fruits of that partnership. So there's been some speculation that potentially he would buy into the company, that this would be the time to do it. There was no at-the-market offering following the Q3 earnings report, which means that there is a window for insiders to buy into the company. Maybe we get some 13Ds filed. Maybe we get something maybe we get something exciting. Right? Who knows this weekend? Wouldn't necessarily say, hey, go out, bet on this, trade this. No, right? This is not financial advice, not trade advice, not telling you to go out and certainly bet on this speculative prospect, but it's something interesting to think about and something potentially to look forward to for those of you maybe who are invested in GameStop already, who are thinking about what this could potentially mean for our continued price action in the near future. So we'll see how today plays out. Looks to certainly be an interesting day. Always is for me an interesting day. Yeah, do please come join us for the live stream tonight. Bring a beer if you like to celebrate the weekend. And yeah, we'll be thinking about otherwise category 42s, DD a bit. We'll be thinking about the sneeze a bit, maybe thinking about some of these dynamics of a recall, as well as having some time for questions, having some time to think about potential trades that might have worked well this week, and yeah, what really ended up driving our price action this week, and whether overall that fit with our expectations heading into the week. So thanks very much everyone for watching and listening. Look forward to seeing you guys tonight, 4 p.m. Eastern time. It'll be on YouTube. There's going to be a link on Twitter to get access to this. So very much looking forward to seeing you guys. Thanks again, as always. Take care.